Good Friday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asia shares follow Wall Street lower as hot US factory inflation gives the Fed more reasons to delay cuts. In Japan, speculation grows the BOJ is set to hike rates next week for the first time since 2007 as traders eye crucial wage data due this morning. Plus, Vladimir Putin prepares to extend his rule over Russia as voters go to the polls in the country's tightly controlled presidential election. We'll discuss that and what another term will mean for the world. Let's check in on these markets then. Firmly a risk-off across the European and US futures. A second downside across the US session yesterday. Steamy factory gate prices and the apparent disconnect in terms of what we're seeing from CPI and PPI and the relatively dovish commentary from Jay Powell of last week. Markets now pricing in a full cut, not in June, but in July. European futures off by 0.1%, currently just above that 4,990 level on European futures. FTSE 100, 7,738, very flat currently at the moment on the FTSE 100. S&P futures back above 5,200 again. Two straight sessions of downsides coming through as investors adjust to the stickier inflation narrative. Currently just pointing lower by about 0.1%. So it looks like we're setting ourselves up for another negative session, a third potentially across Wall Street. Nasdaq futures pointing lower by 0.3%. Let's flip the board and look cross asset then. A big day, of course, for Japan. We are expecting the press conference from that major union at around 7:15 UK time. And of course, expecting some kind of update in terms of the wage negotiations and what that could mean for the BOJ. As we said in the headlines, speculation increasing that the BOJ could go potentially next week with its first hike since 2007. We know the wage data is going to be crucial to that decision. You saw the sell-off across the Treasury curve, most pronounced at the back end yesterday on the back of that stronger than expected factory gate producer prices. And you saw about a 10 basis move higher on the 10-year yield. Currently, that benchmark at 428. The yen then in focus, 148 currently on that currency. Not a lot of movement so far. Of course, that could change later this morning. Copper, this really is the commodity to watch right now because it's broken through that 9,000 level. It is currently at a 11-month high on speculation that maybe that demand picture is starting to heat up and the supply constraints as well within copper. So notable given that 11-month high around the Dr. Copper picture. Bitcoin, 67,000, so it's taken quite a significant move lower. It had crossed above 73,000. Increased concerns about the frothiness, bubble speculation around what is happening with cryptocurrency. So it's taken a leg lower. Currently in the session down 4% on Bitcoin. Is there further downside or will the halving narrative give that more support in the weeks ahead? Let's cross over to Asia now where Avril Hong is standing by in Singapore. Avril, what is standing out to you on the Asian session?
Yeah, what's standing out is a bit of a double whammy that Asian equities are getting from the US PPI, but also the Chinese central bank. Now, it didn't come through with stimulus, and this was as expected. I'll get to that in a bit. But note here as well that the tech shares were among the biggest drag on the MSCI Asia Pacific today. They're the ones feeling the pressure, and Hang Seng Tech is declining as well. That's pushing down the Hang Seng, but it lost 2.5% earlier. It's really interesting to see how it is pairing the declines from earlier on in the session. And note here as well that the ETFs that usually enjoy the national team's attention, those are picking up. CSI 300 also pairing losses from earlier in the session. Let's flip the board and take you to what we got out of the PBOC today. The one-year MLF left unchanged as expected, but there were still some corners of the market. Several economists who thought maybe we get a 10 basis point reduction. And this was maybe fueled by the PBOC governor front-loading the RRR reduction, which came into effect in February, perhaps sending a signal to some that they're paying more attention to boosting market confidence and fighting deflation. We didn't get that. MLF left at 2.5%. Not only that, we also got the Chinese central bank draining liquidity. ANZ says this is to squeeze speculators. So they say watch out for those yield reversals. Let's flip the board because another signal that's coming through very interestingly, as you talked about the copper rally, we're seeing that divergence with iron ore. These two commodities tend to go in similar directions. There's supply-demand dynamics at play. Some say also structural shifts in the Chinese economy as there's a focus on the new economy side of things versus what used to be that old infrastructure playbook. Regardless, this is another mixed signal for investors to contend with. So might be another headwind for Chinese equities. Flip the board again. I want to take you to Japan cross assets. As you know, we're watching out for the Rengo, and there's a lot at stake here. The Nikkei is declining today, but we saw some of the losses for the topics capped thanks to the rally in the mining, energy-related names. The yen also pushing upwards of 148 against the greenback. All eyes on those wage talks. Tom.
Ava Hong, thank you very much indeed. Rengo, indeed, the umbrella union that, frankly, most of us had never heard of until a few weeks ago. And it is front and centre in the session today. Ava with a breakdown of the Asian markets. Thank you. Let's stay on that story then. Japan's largest union group will hold that press conference then on wage negotiations, 7:15 a.m. UK time. The figures could be, of course, that deciding factor in whether or not the Bank of Japan will raise rates then for the first time since 2007. Very pleased to say I'm joined now by Bloomberg's Brian Fowler in Tokyo. Brian, what is the expected outcome then when we look at Rengo?
Yeah, so we expect those headlines to come across the terminal in about an hour, and the indications are that the number will be very, very strong. We had a couple of unions a couple of days ago announce early results, and those were all at 5% or higher than 5%. Remember, the number to beat is 3.8. That's what we had a year ago at this point. The initial deal was 3.8. We think we're going to be well above that. Rengo asked for 5.85%. It's not going to get that. However, with inflation sticky, staying at or above the BOJ's target for almost 2 years, with the labor shortage deepening, it's reasonable to think, based on past experience, that they will get 80% of that demand, which would put it right around 4.9%. That would easily be the strongest growth in wages in more than 30 years, and it would send a strong signal to the BOJ to go ahead and end negative rates on Tuesday.
Wow, we could be looking at 4.9%, as you say, from 3.85%, the initial print last year. What then would be the rationale, Brian, for holding next week? What would be the concerns for the BOJ if they were not to move next week?
I think there are two things to think about. So first of all, they could say, well, there's no real need to go immediately. We could take one more month. We could send a signal to the market. We're definitely going to do it, but we're going to take another month to do it. And the other thing is the BOJ has said over and over again that it wants to see confirmation that its virtuous wage price cycle is kicking off. Well, if the wage hikes are as high as we think they'll be, that would indicate that maybe consumers will feel a lot more confident about spending in months from now. And that might be the catalyst the BOJ is looking for to say, yes, wages are going to feed into demand-led price gains, and that is enough for us to go ahead. So that's what I think the BOJ is going to be discussing on Monday and Tuesday.
Yeah, very interesting. As our team in Asia speak to Suntory, and they say they want to see further wage increases across that business. Bloomberg's Brian Fowler, thank you very much indeed, setting us up, of course, ahead of a crucial day for the BOJ with those wage agreements in focus for us. Another hot US inflation print, meanwhile, and this, of course, plays into the BOJ story, reinforcing bets that the Fed will not be rushing to cut interest rates in the US. Let's bring in our MLive strategist, Mark Cranfield, standing by in Singapore. Mark, your reaction then to this data. What are bond traders looking for after PPI came in, as one analyst was quoted in BN saying, steamy?
Well, no, it's really made the whole dot plot story so much more interesting next week. So really, for bond traders and probably for FX traders to some extent as well, the discussion was about how far are the Fed going to go in adjusting the dot plots when they meet next week. That's in terms of the projection for interest rate cuts for the rest of this year. Now, it took the market ages to get in line with the Fed at the projection for 3 interest rate cuts. We're pretty much there now, and yet, because of the structure of the Fed, it only needs a couple of people on the FOMC to change their mind, and suddenly we're looking at 2 dot plot cuts rather than 3. And it's not just the PPI numbers. We also had pretty hot CPI numbers as well. We had a couple of those. So you can see that it wouldn't take too much here for the Fed people to shift that way. That would be pretty negative for the bond market and probably be quite good for the US dollar as well. Although, of course, the BOJ comes in between that, and that will obviously have an impact on dollar yen. So there's plenty in the pot here to be stirred around. But yes, certainly, really for bond traders, it's really all about, is the Fed going to stick with projecting 3 interest rate cuts? They certainly have enough time. It's only March. they've got several more meetings this year, or because the market is thinking they're not even going to start until July, is there only room for 2? And that'd be pretty negative for the bond market.
OK, the dot plots, the importance of the dot plots, and whether or not Jay Powell does a lobbying effort across the FOMC to get them to stick to 3, given his relatively dovish commentary that we've heard in the last week or so. It's risk-off then across these markets, dollar up about 0.1%. What is driving the risk-off? Is it all about that narrative around the Fed and around sticky US inflation?
Well, interestingly, it's partly what you mentioned earlier, actually. The slide of Bitcoin today in Asia was really the thing that started to trigger a broader move of people then starting to say, hey, Bitcoin's giving up quite a few gains. Maybe we should start paring back before what's going to be a huge week next week. So from Bitcoin, it started to go into the equity markets, Hong Kong stocks having a particularly bad day today. But most equity markets are down in Asia. Then we saw some defensive buying of the US dollar as well. There's a bit going on in commodities, as you mentioned there. Copper's doing well, but iron ore is not. So there's a bit of divergence, and people are probably just assessing that there are just too many huge things coming up in the week ahead. Maybe it's better to be on the sidelines. And on top of all of that, it's triple witching night today in the US equity market as well. So if you're looking for excuses for taking some money off the table, there are plenty.
Yeah, you've got plenty of excuses, don't you? Complexity across these markets on this particular day with that divergence, as you say. Mark, thank you very much indeed. Fascinating that Bitcoin and the sell-off there was the canary in the coal mine, at least for the trading session today. Mark Cranfield, of course, from MLive, one of our key strategists there. Here's what else we're looking at today then. 7:45 a.m. UK time. We're going to get final French CPI for the month of February. The survey is looking at 0.9%, in line with the previous month. We'll see if that comes in, of course. We've had a bit of dovish commentary, arguably, from some ECB officials over the last few days. And, of course, the inflation data out of France and other key members of the Eurozone crucial to that assessment from the European Central Bank. 2 p.m. UK time, meanwhile, we switch focus to the US once again. The University of Michigan sentiment survey. Interesting that retail sales was softer, notably softer in the data that was out yesterday. Whether or not the sentiment survey builds on the view that maybe the consumer's looking a little more fragile in the US is going to be interesting. Today, of course, it is the Russian presidential election. That begins in Russia. We keep across that for you as well. Voting has started, and of course there is a very strong expectation that Vladimir Putin has already essentially got this in the can. We keep across that story for you, the domestic implications for Russia, the global implications as well. Coming up, oil markets hit a 4-month high. We're going to let you know what is behind it and get the view from Crystol Energy founder and CEO Carole Nakhle. That is next. Plus, later I'm going to be speaking to Piraeus Bank's CEO, Christos Megalou, as Greece prepares to sell its stake in the bank, the biggest lender in Greece. A view as well on the Greek economy. That exclusive conversation is coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, oil hitting a 4-month high as the International Energy Agency warns of a supply deficit throughout this year. That's instead of the surplus that was previously expected, as OPEC Plus looks set to continue output cuts in the second half of the year. For the analysis then across these oil markets, let's bring in Crystol Energy founder and CEO Carole Nakhle. Carole, always great to get your insights and your analysis. Let's start with then the forecast from the IEA. They've gone from surplus to deficit, but there is a key assumption baked into that, and that assumption is that OPEC Plus and those cuts are extended. What is your view on the forecast from the IEA?
Good morning. Indeed, if we look at the monthly forecast from the IEA, at least from the beginning of the year until today, so 3 months oil market reports, we can see how they have been changing their numbers. They're becoming more bullish on the oil demand, so gradually increasing their forecast for this year. But most importantly, it is their outlook about the market. So only last month they were saying that the market would remain comfortable until the end of the year. Now they are talking about the market possibly being in a deficit, though they do recognize it's a marginal deficit, so not much happening in terms of being too worried about price rises. However, their main assumption is that OPEC Plus will maintain its cuts, which have been extended for the half of this year, for the first half, till the end of the year. So there is a big if there, and whether OPEC, first of all, is going to extend its cuts and whether its members are going to maintain their discipline, because we're already seeing the laggards, the usual suspects, such as Iraq, not delivering on their promises.
The usual suspects. Well, let's push you a bit more on that then, because that is the crucial element, it seems, within this forecast, is that assumption around the extension of cuts. And you're pointing to the divisions within OPEC Plus. Iraq is one of them. Arguably, the UAE could be as well. What is your expectation as to whether or not the group can hold the line then through the rest of this year?
Well, I think because of all the diversions that we have seen over the last few years, I think they are not doing a bad job at all, especially if you take into consideration the reputational damage that the departure of Angola caused in December. So they were able to overcome that thing. And the UAE got a sweet deal from OPEC Plus and the previous discontent within the organization, because they saw their production baseline increasing. And from a higher baseline, they applied their quota. So in a sense, they are getting away with more production without breaking any quota. Iraq, it has for a long time, they struggled to deliver on their promises. But what matters is the big players, Saudi Arabia and Russia, as well as other members such as the UAE. But I would say it's Saudi Arabia and Russia that is holding the whole group together in OPEC Plus. So I'm not too worried about their solidarity. I'm more concerned about their discipline. But hopefully that will not be an issue for the group, given what they went through already.
US inventories falling for the first time in about 7 weeks. The stockpiles are shrinking in the US. What's your outlook for US production?
Well, this is an interesting story about US inventories, and I think that put an upward pressure on prices that we are seeing these days. But I want to go back to what the IEA expected for the oil market for this year, because they said that while onshore inventories decline, there is plenty of oil sailing in the sea, around 1.9 billion barrels taking time to reach that destination because of what's happening in the Red Sea. So we should take that into consideration as when it comes to inventories. In terms of oil production in the US, it continues to surprise everyone. I can't tell you how many times I have come across pessimistic forecasts where people were simply talking about the demise of the US oil production, at least shale production. I remain optimistic. We may see a slowdown if prices slow down, but I think it keeps on surprising everyone on the upside. And it is driving the growth in non-OPEC supply in the world.
Very interesting. Carole, where is the demand coming from at this point?
If you look at oil forecasts, they have one thing in common, that is Asia and primarily China. So definitely China is growing. It is the main oil importer in the world, and they are playing a massive role on the demand side in all forecasts that you have come across to. But China, this is really the wild card, because the economic situation is not comforting. They are facing structural problems. And when I say structural, these are not things that are going to dissipate within a month or two. They will take years to be tackled, and they require fundamental changes in government policy, in the structure of the economy. So this is my main concern, that yes, it is increasing. The demand from China is increasing, but not at the pace that many have hoped for.
OK, always with the smart analysis on these oil markets. Crystol Energy founder and CEO Carole Nakhle, thank you very much indeed for your insights this morning as we look at Brent at $85 a barrel, WTI at 81, just over 81. Carole, thank you very much indeed. Some breaking news crossing the terminal now around an acquisition. This has been in the makings for some time. Swisscom to buy Vodafone Italia for €8 billion cash and debt free. We know that Vodafone is restructuring and trying to sell down some of its assets, and Swisscom now agreeing to buy Vodafone Italia for €8 billion cash and debt free. We'll keep across that story for you, of course. Swisscom also saying they're going to increase their dividend to 26 Swiss francs per share payable in 2026. Another redhead crossing the terminal. We've been talking about oil. Now we'll talk about iron ore. Futures dropping to $100 a tonne. Futures dropping to $100 a tonne. Carole Nakhle talking about the China demand for oil, well, the China demand for iron ore, and the lack of demand and the lack of stimulus. And we saw that again with the removal of some liquidity in the Chinese financial system today, is why you are seeing softness in the iron ore price. Key component, of course, in terms of the build-out of infrastructure and real estate in the US. Iron ore under pressure, even as Brent oil is up and copper as well, of course, crossing through 9,000 per tonne. So that divergence that we're seeing between iron ore and copper, really fascinating what it tells us about this global economy. Coming up, low prices for lithium, cobalt and nickel. Staying on the commodity story, set to persist through 2024, causing friction in the energy transition. Our deep dive on battery metals is next. Don't miss it. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's turn now to the renewable energy sector. Over the past 18 months, prices for metals used in batteries have crashed, adding friction to the energy transition. For the details, the analysis, let's bring in Kwasi Ampofo, the head of Bloomberg NEF's metals and mining research. What then is driving the downturn in terms of the metals that go into these batteries for the EV space and elsewhere?
I think, Tom, this is a journey that started during COVID. So obviously during COVID, we saw prices of these commodities, battery metals in particular, go very high. And when you have high prices, as we say in the economics of commodities, higher prices cure high prices. So as prices went high, a lot of supply jumped on the caravan and started producing more.
And lithium prices, crucial, of course, as the input into EV batteries, particularly badly hit.
Yep.
Do we just tie that directly to the travails of Tesla? Is it more complicated than that? Talk to us about lithium.
I think it's a bit more complicated than that in the sense that similarly to what happened with the other metals like nickel and cobalt, we saw prices rise high. A lot of suppliers in China, in Zimbabwe, in other parts of the world really came in with a lot more supply than the demand market. And as you know, what is happening in demand? China's real estate slowing down, high interest rates in the US, as well as high inflation in Europe, resulting in demand really slowing down. So you have high surplus meeting low and drop in demand, and it really is what drove down the lithium prices. OK, so bad news for producers, good news arguably for customers, for consumers. Are we seeing that? Absolutely, right. So if you look at currently the electric vehicle, the battery is the biggest cost component. At the same time, about 40 to 70% of the battery costs come from metals. So if you have metals prices coming down, what that means is that cheaper batteries, cheaper EVs. And look, we've seen companies like Tesla and BYD pass on that cost savings to consumers. But one key thing, Tom, is the fact that this will not last long. If you have an extended period of low prices in the metals industry, it restricts new supply. So 2-3 years down the line, if new supply doesn't come online, demand is still going to grow anyway. So you're going to have a reverse of what is happening today, where it's no more going to be a surplus, it's going to be a deficit, leads to high prices. And you know what that means for the O2.
Where do you look specifically for those constraints around supply? Softer prices, as you say, it's going to lead at some point, at least. We can benefit now from the softer prices for EVs and other products as a result of these falling commodity prices and metals prices. But at some point, they're going to have to restrict supply. Where do you look for that?
I think the key thing to look for in where supply is restricted is actually the current assets where it's very high cost. So in lithium, there are different types of deficit. Obviously, you've got a spodumene coming from Australia, the brine in Chile. There's also what we call the lepidolite in China, which is at the moment a very high cost, right? So when you have prices go low for an extended period of time, these deposits that are high cost obviously become difficult. So I think that will be the pain point in future, which sort of limits supply to push us into a deficit.
OK, really, really interesting evolution in terms of the metals that go into these electric vehicle batteries and other parts, of course, of the transition process that we continue to see. Kwasi, thank you very much indeed for the details, for the analysis. Bringing it to us, of course, Kwasi Ampofo, head of Bloomberg NEF's Metals and Mining Research. Coming up, we're going to talk exclusively to the CEO of Piraeus Bank. It is Greece's largest lender, Christos Megalou, as Greece sells off its stake in the lender. The view as well on the Greek economy. That is coming next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asia shares follow Wall Street lower as hot US factory inflation gives the Fed more reasons to delay cuts. In Japan, speculation grows. The BOJ is set to hike rates next week for the first time since 2007. That's as traders eye crucial wage data due this morning. Plus, Vladimir Putin prepares to extend his rule over Russia as voters go to the polls in the country's tightly controlled presidential election. We will discuss what another term will mean for the world. Let's check in on these markets. Risk off across the equity markets. 2 straight sessions of downside for the US. It looks like we could be set for further pressure today. Yes, the inflation narrative around the stickiness and the challenge for the Fed is firmly at the front of people's attentions. Currently, European futures just down about 0.1%. FTSE 100 futures in similar territory, looking to losses of just 7 points at this stage. S&P futures above 5,200, but looking to losses of about 0.1%, building on the downside over the last 2 sessions. Nasdaq futures 18,210. Pointing lower by 0.3%. Let's flip the board and look cross-asset then. A big day, of course, for Japan. We continue to monitor the pressure across the Treasury curve in the US. Maybe pressure is the wrong word to use, but you did see a bit of sell-off yesterday. 10 basis points higher on the 10-year yield. 427 as things stand. Just 1 basis point move there. The Japanese yen, again, in focus, given that major union, the umbrella union, will be updating us on the wage negotiations in the next 30 minutes or so. 148 currently on the Japanese yen. Copper breaking through 9,000 per tonne. First time in 11 months on expectations that demand is picking up. Bitcoin crashing through 70,000. It, of course, broke through 73,000. Now at 68,000. A little bit of concern about bubbles in the crypto space. Down 3.4% so far in the session. Let's bring you a breaking redhead then in terms of Vodafone. We know that now Swisscom will be buying Vodafone Italia, that business, for 8 billion. Here's the upside then for shareholders in Vodafone. They're going to be returning 4 billion euros to shareholders via buybacks. This business has been constrained in terms of the stock price over the last 12 months. This is an effort then to refine this business as the restructuring goes, and some progress then with Vodafone Italia being sold to Swisscom. Over a year, by the way, the stock, Vodafone's stock, is down. Let's have a quick look because it has been under pressure, and now they are returning this cash to shareholders, down about 20% over the last 12 months. We keep across that corporate story, of course, for you over the next few hours. The shareholder return there coming through, 4 billion for Vodafone shareholders. Let's get to a story now that's unfolding around Greece and the banking space, and some success, at least on the top line. Greece raising 1.35 billion euros for its stake in Piraeus Bank as the state continues to divest from holdings in banks built up during, of course, the country's debt crisis. Very pleased to say I am now joined by Piraeus Bank CEO Christos Megalou here in the studio then. Christos, good morning. Thanks for joining us. Success then for you and the bank in terms of the stake sale of the state, and that signals confidence. You've managed to turn things around at the lender. What have you been doing? What have been the key ingredients to that turnaround?
It has been a journey, a 7-year journey, I would say. It is the result of an elaborate strategy that focused on all the main issues that we had to address. We had to do a number of groundbreaking transactions on the way. The sale of the first non-performing exposures package in the Greek market, the sale of the management unit of the non-performing exposures, issuance of debt, issuance of equity. We raised equity in 2021. We were able to turn around 54% of non-performing exposures into our balance sheet into what is currently about 3%. And we are looking at the future with confidence.
You're aiming now for profit in terms of annual profit of what, a billion euros until 2026. What gets you to that? What's your level of confidence you can get €1 billion of profit until 2026, and how do you get there?
We came up with a very focused, very granular and elaborate business plan for the next 3 years, 24, 25, 26. We laid out our projections that end up in about $1 billion a year for the next 3 years. This is a combination of a very healthy top line, some very good fees and commissions outlook, a very focused, disciplined OPEX reduction and discipline program that we have been implementing the last few years. And finally, rationalization of the cost of risk. Greece is not producing as many NPEs and NPLs as it was producing before, and therefore cost of risk and finally bottom line for the first time in a few years is there. 2023 was the best year ever for Piraeus Bank. 24 we expect is going to be even better, and we see the outlook for the future even brighter.
And clearly the macroeconomics is helping there when you talk about the reduction in non-performing loans across the portfolio. When it comes to deal making, when it comes to activity, IPOs, M&A, acquisitions, are things starting to pick up there as well? What are you looking at? What are you seeing as you project out in the quarters ahead?
The economy is growing, and the economy will continue growing for the next few years at a higher than the European average, and that's the best backdrop for banking and also for the country as a whole.
Does it mean more deal making?
It means more deal making, and we see it also in foreign direct investment, which is happening as we speak, both granular and from international companies, as well as deal making among Greek entities as well. It means a lot more for credit growth. So the whole plan of ours is underpinned by a net credit growth of 5% and 6% over the next few years. And also the Athens Stock Exchange is revived at the back of an investment grade, which we believe it could be also emerging from emerging markets into mature markets. So quite a lot of interest from investors. We saw it in our transaction. It was oversubscribed significantly. Very good quality investors. I would say Greek economy and the Greek capital markets are turning the corner.
Okay, the Greek economy, the Greek capital markets are turning the corner. That foreign investment inflow is continuing. What is attracting foreign investors? Where is that money going specifically across the Greek economy, and how do you expect that story to evolve?
There is networks, digital and renewables. There is a lot of activity happening in energy storage, in energy transition. There is a lot of activity happening in the pharma sector. Agribusiness is an area where we particularly as Piraeus play a very big role. We see Greece becoming a hub for the region, both in the networks, digital and energy networks, as well as Greece actually being in a position to grow higher than Europe, and this is also an attraction. So areas of interest are significant across the board, granular, and it's not only tourism and hospitality, where, by the way, we expect to have an even better year this year than what we have in 2023.
OK, your governor, your central bank governor, Stornaras, coming out yesterday saying there needs to be 4 cuts from the ECB this year. 2 need to come early before the summer. Does the ECB, in your view, need an insurance cut?
Look, everybody is expecting, and the forward curves are projecting what they are projecting. Usually this comes, it's quite a volatile forward curve, as we all know. A few months back, we were talking about higher for longer. Now we are talking about cuts. We do expect the first cut to happen in June. And then between June and the end of the year, maybe 2 or 3 cuts happening. The reality is that the Greek economy, the European economy, and the ECB is looking at the European economy, is actually helping with the inflation going down so that interest rates will follow a descending path.
Are you worried that rates are too restrictive or could become too restrictive?
The way they have been managing through the monetary policy to end up with a soft landing, as we have seen, because it's not where we are right now in Europe. Is not really bad if you compare it. So going a little bit further as we speak from now on until the end of the year would definitely help the European economy perform.
OK, back to your business, back to your bank. What is your expectation that regulators are going to allow you to hand out dividends, start paying out dividends by the end of this year? Is that likely?
This is an ongoing discussion, and this is a year-by-year discussion. For 2023, the year that has just passed by, we are in discussions with the regulators, and it's a very constructive and honest dialogue. And we have already accounted in our financials a 10% post-tax payout ratio, which is something that we expect to happen. And it's something that is a symbolic move, let's say. From now on, and for the years to come, is going to be an annual discussion as things evolve and as profitability comes into the bank.
As of today, you expect that to happen this year?
I expect that to happen in 24 at the back of a very successful 23. And as I said, it symbolizes the return to normality.
Does there need to be consolidation in the Greek banking sector? Would you play a role there?
I think that the banking sector is quite competitive as we speak. It doesn't need to have less banks. I would argue competition is always good, so I would argue that you need more banks rather than less as far as Greece is concerned. It's only 4 banks right now that are really playing a role.
Very different picture in the banking space versus Germany. Very different picture when it comes to the economy as well. And that's quite a turnaround in recent years. The Greek economy outperforming the German economy, at least on the metrics that we see today. Christos, thank you very much indeed. Really appreciate it. Christos Megalou, of course, the CEO of Piraeus Bank, Greece's largest lender. Coming up, elections in Russia beginning today with President Putin all but certain to win another term. We look at what that could mean. A Putin term would mean another one for the world, of course, for the Russian economy, but also for the geopolitics of this world. Stay with us. This is Bloomberg.
It's nearly a quarter of a century since Vladimir Putin first took power, and his adversaries both inside and outside Russia seem unable to stifle his ambitions, showing off Russia's military might in the lead-up to this weekend's presidential election, which he's sure to win. Now 71, Putin has outlasted world leaders from Angela Merkel to Silvio Berlusconi and held power through 7 British prime ministers and 5 US presidents. In over 2 years since sirens marked Russia's full-scale invasion of Ukraine, Putin's economy continues to weather the impact of retaliatory sanctions, with countries including China, Brazil, and India still buying Russian oil. Riding a rising tide of nationalism, Putin presents himself as a protector of Russian-speaking people, while the death of Alexei Navalny in an Arctic prison removed perhaps Russia's most powerful symbol of resistance. In the years ahead, Putin will have an opportunity to increase Russia's influence in the world, chairing the expanded BRICS group and continuing his friendship with Beijing. Putin. Now, with the war seemingly shifting in his favor, Putin is preparing not only for another term as president, but also possibly for a long confrontation with the West.
OK, that was Bloomberg's Max Ramsey reporting on the Russian presidential election, which, of course, gets underway today. The election is the theme of today's Bloomberg Big Take. Joining me now is our team leader then for Russian economy and government, Tony Halpin. Tony, fewer people know this story better than you do. The result is all but certain then for the Kremlin. So what's the point of these elections? What are they hoping to achieve?
Yes, Tom, good morning. There's no risk of a recount, that's for sure. But one thing they really want to achieve is the sense that all of Russia is behind Vladimir Putin in prosecuting his war, that Russia is the united leader of the country, and that he's therefore has a free hand to pursue his confrontation with the West to try and achieve victory in Ukraine as he sees fit. It's a demonstration from the Kremlin, really, to those outside the country that Russia's intending to continue and to prosecute its war.
So what is it likely to mean then on the ground in Ukraine and with Moscow's relations with the rest of the world?
Well, Russia's been making recent gains on the ground in Ukraine, and that's partly because Ukraine has been struggling for munitions with delays in supplies from the US and Europe. Putin's trying to take advantage of that So we may well be able to see after the election an intensification of Russian efforts to advance in Ukraine. And Putin himself has a long-term goal of reorienting the global balance to challenge the West and create what he calls a multipolar world in which Russia has a much bigger role. And that requires him to strengthen relations with China and the global South and Africa and India in particular.
Well, the international opposition is clearly there, and we're seeing that even as on some levels it stalls, and we think about the $60 billion of funding that's held up in the US Capitol. Domestically, though, Tony, and we reflect, of course, on the death of Navalny and the bravery, frankly, of that opposition leader. Is there any opposition to Putin at this point, real and significant opposition to him in Russia?
No, not really at all. As you've noted, the death of Navalny in an Arctic prison camp was a real moment because he was far and away the figurehead of the opposition to Putin. Putin had managed to put him in prison. He has died in that prison. There's no one of any stature similar to Navalny who can step up and take over the leadership of the opposition. And in any case, many of those who have been very active in opposing Putin are in exile abroad because Russia has introduced a series of draconian laws which makes it very, very difficult for anybody to stand up and dissent to the war.
Tony, before we let you go, how dependent is Putin's Russia on China right now?
Very and increasingly. It looks to China for sales of energy because energy sales to Europe are now essentially in decline and are not going to return. And it looks to China for all manner of goods to import because markets in Europe and the West have been cut off. China's really the only source of finance, if they can obtain it, for Russian companies. And it's the source of so many goods that Russia needs and will need in the next few years.
Bloomberg's Tony Halpin, thank you very much indeed in Dubai on, of course, that election in Russia and what it will mean domestically and internationally as well, the implications. Thank you. Now to some of the other stories making news today. The leader of Yemen's Houthi rebels says the group will expand their attacks to Israel-linked ships in the Indian Ocean. He says the Houthis carried out 3 attacks in the Indian Ocean this week and won't stop until the war in Gaza ends. A shipbroker said this week sea traffic using the Cape of Good Hope route is up 85% since December due to Houthi attacks in the Red Sea. US Senate Majority Leader Chuck Schumer has called for Israel to hold new elections and replace Benjamin Netanyahu. Schumer, the highest-ranking Jewish elected official in the US, says Netanyahu has, quote, lost his way. It comes as the Israel-Hamas war rages on. Meanwhile, the Biden administration has sanctioned 2 Israeli settlements in the West Bank and called on Israel to do more to end violence against Palestinians there. It's the second time since February the administration has imposed sanctions on Israeli settlers. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. This is what we've been waiting for then, the umbrella union and the update on wage negotiations out of Japan. I believe we have a breaking line, which we'll update you on as soon as it comes through my ear. Hopefully I can get you up to date on that. But we are, of course, expecting the update. Last year, by the way, the initial number came in at 5.85% in terms of the wage negotiations. We saw Toyota earlier this week, meeting the demands of the unions in terms of bonuses and wages. 3.8%, I should say, was last year's initial turnout. 3.8%. We're expecting a number higher than that when we get the union update. And we've got some lines crossing right now. So the Japan unions win over 5%. Win over 5% in terms of the wage hike. So well above that 3.8% initial number that we saw last year. 5% is the number that's being reported by Kyodo, of course, the Japanese news agency. And that will play into expectations that the Bank of Japan then has the room to be able to move for the first time since 2007 at the meeting next week and increase interest rates from minus 0.1% arguably to 0%. We're looking at the Japanese yen moving on the back of this. A little bit of strength coming through, up 0.1% versus the US dollar. It's not a huge surprise that you're getting 5%, but it does lock in, or at least gets closer to locking in, the view that more sustainable wage increases is there now in the Japanese economy and that the BOJ can make that move next week. Not 100%, of course, yet. It's still very much a live decision. This is the story longer and across the decades when it comes, because this has been a 30-year project, of course, for Japan. They're looking at the kind of wage gains they got back in the 1990s. It seems that they are now much closer to there. We keep across this story for you. Let's flip the board and have a look at PPI then. Talking of inflation out of the US, where it's a different story. It is producer prices that came in and built out that picture that it is a stickier inflation environment once again. And there is a gap now, it seems, between the relatively dovish comments of Jay Powell last week and what we saw in CPI and producer prices, factory gate prices. 1.6% was the number. The expectation was that you'd see 1.2%, 1.6% year on year in February, and it's services once again leading the gains. And you're seeing once again the number coming in above the estimates. Let's briefly flip the board again to what's happening in terms of the oil and energy space, because this is also really crucial, of course, when you think about the inputs into the broader inflationary basket. $81 a barrel. So what you're getting is a confluence of events, the shrinking inventories in the US, you're getting the geopolitics of those Russian refineries being hit, and then, of course, you're getting the view from the IEA that OPEC Plus could, if they continue to extend those cuts through the year, could end up seeing a deficit in terms of these oil markets. There is a question mark, of course, as to whether or not OPEC Plus has the discipline to hold that cut through the rest of the year. Bloomberg Intelligence, by the way, saying there's a big gap between the oil majors and the oil price. An interesting story to consider as we look at the equity markets. That's the oil story. There's plenty more coming up, of course. We're going to be keeping across what's happening with iron ore, with copper and with Bitcoin, because some very interesting divergence in the commodity space here. Iron ore currently down 4%. You can tie that again to the lack of liquidity impulse coming through from China. In fact, they drained some liquidity in the system this morning. And again, a reminder that big stimulus is not going to come through from China. And so the real estate sector will be challenged, and that demand for iron ore, particularly from jurisdictions like Australia, will be weakened. Copper, a very different story. Expectations that actually demand around copper is picking up and that supply constraints are there, and you're seeing it breaking through $9,000 per tonne. It's currently up 1.5% in the session on this marking. Bitcoin taking a bit of a hit, concerns about bubbles within cryptocurrency. It had broken through 73,000. It's now trading, of course, the biggest cryptocurrency on the market, currently trading at 68,000, down 3.2% so far in the session. Markets Today is up next. We'll continue to work through all of these topics for you. It's a very fascinating day across these markets. Japan in focus for us today, of course, on the wage story. Stay with us. This is Bloomberg.